Hello, welcome back to ICT Trading Concept. How are you all? I'm very fine. So if you have already watched my weekly analysis and the daily batch video I have uploaded yesterday and today just before the session, you have already know where market was going, and I gave you a very specific price action, very specific fair value gap, and gave you also the very specific swing high and swing low to determine your bias. Okay. Now, in this video, I am going to talk about how you can be profitable even if you go against your bias. Okay. If you work with your narrative, you will be profitable. If you work with the weekly analysis or daily bias, you'll be profitable as well. So there is nothing that can stop you to being profitable. Now, all you have to do is you have to trust your process. You have to feel the thing you are watching on the chart, everything that is very important. If you don't trust, if you don't feel it, that is very difficult for you to be a profitable trader. Okay, so I would love to start from the beginning. I marked this fair value gap and this fair value gap. If you have already watched my daily bias video and the weekly analysis, you already know about these two two fair value gap. Now I would love to talk about them. Okay, I'll start from the beginning. So I told you, if I see market actually went through this fair value gap, then I will expect market will come over here to that specific buy side liquidity. Okay. To my daily bias video, I have marked this high and this swing low. I told you, if I see a body close above that high, I will expect market will come over here. If I see market break this low, I will expect market is going to take that sell side liquidity. If you remember that or not. Why I'm actually marking the hourly fair value gap? Let's go to the 15-minute chart. You can tell me that, brother, always you talked about the 15-minute chart, 15-minute fair value gap. Now, why you were actually expecting some fair value gap from hourly chart? Okay, come over here. So this is from 15-minute chart. You see the fair value gap is from here to here. It's a huge fair value gap. I don't like to work with that type of big fair value gap. That's why when I'm in hourly chart, I can see a very specific fair value gap that I can use to determine my bias as well as my trade entry. Okay, trade entry setup. That is very useful for me when I see something very difficult from 15-minute chart or lower time frame. I really love to mark them from hourly chart. And here as well, you can see very nice fair value gap. That on was very nice from hourly chart. But if you come to 15-minute chart, you will see a very messy price action over here. Okay, so that is the reason I have marked the hourly fair value gap. Now, when I talked about the 15-minute chart, I told you to go 1-minute chart and look at the 1-minute candle. But when I talked about the hourly fair value gap, you have to go to your 5-minute chart. Why? Because if you go daily, if you mark the daily fair value gap, you have to observe the fair value gap by hourly or 15-minute chart. If you mark the fair value gap from hourly chart, you have to go to 5-minute chart. 15-minute. If you mark the fair value gap from 15-minute chart, you have to go to 1-minute chart. Okay. So this kind of thing you have to remember, or you have to actually write it out to your notebook. Now look over here. This is that high, swing high. Why that swing high? Why I have marked that specific swing high? Because this swing high actually trade this fair value gap. So this is the swing high that will determine a market structure shift. Okay, and why this swing low? Because this is the lowest low, and when this low will be broken, I will get my market structure shift to the lower side. So I need the market structure shift. That's why I have marked that swing high from hourly chart. Now when I'm in 5-minute chart, you can see this is the first time when I saw market has been shifted. Okay, so it has been shifted from 5-minute chart. I got my market structure shift, so I can go to 1-minute chart, and you can see this low never broken. Okay, this swing low never broken. So I don't need to talk about this because I'm not expecting market will go lower anymore. I'll go to 1 minute chart, and from 1 minute chart, it's very difficult to explain for everything within a short time. Okay, whatever. So when from 5 minute chart, I see this high actually broken. I got my market structure shift. I was waiting. Okay, I was waiting to see more price action, and I saw before 9:30. I told you don't take entry before 9:30 because it is very difficult uh, to actually hold your entry at that volatility. That is a volatility from 9:30 and it's huge. I can't hold my trade or my stop loss for that type of volatility. So I don't take entry at 9:30, and before 9:30 everything is messy. Most of the time you will be stopped out. So that's why I told you please try to take your entry after 9:30. Price actually shifted the market. It went lower. Why did it come? To this volume balance. Okay, this is a very nice volume balance. You can see the volume balance. In the meantime, it has traded the lower part of the hourly fair value gap. Then it went higher at 9:30. When it went higher, there was a nice fair value gap. Look at this fair value gap. So that is your fair value gap. If you would love to take your entry to that fair value gap, obviously that is what to say. I mean that is valid because you got your market structure shift from here from hourly chart, or I mean from hourly chart you have marked the swing high. From 5 minute chart you got your market structure shift. Even if you don't want to mark that on as your market structure shift, you got the market structure shift from here as well. Okay, so I don't want to talk about this thing. You can take this entry, but I am not going to take that entry because that was just after 9:30. You see the volatility, and it was, I mean, if I would take that entry over there, I had to put my stop loss over here. So it's near about 41 handle. I can't hold my trade for that much handle. That actually doesn't let me take entry to my top step account, or it's huge. So I didn't take that entry. So I was waiting to see what price is actually doing. So later I need to go to 5 minute chart one more time here. So later price actually went through the last fair value gap. So this is the last fair value gap, and don't be confused about this three line. This is the daily volume balance, and it's not important right now because the last hourly fair value gap was very important. So I would love to talk about the hourly fair value gap. I'm just going to ignore this I mean the daily volume balance. I'm just going to ignore that. Okay, so price actually went through the last hourly fair value gap. What I told you about the what to say the fair value gap 80. Okay, it came to the consequent encroachment. Consequent encroachment, I mean rejection. Price came back again to the upper level of the fair value gap nicely. Then it went higher. Okay, so if you would love to take this entry, that is also valid. You have to put your stop loss just below the fair value gap, and you can go for some measurement. It's near about 55 handle, or you can target that high, that is also 40 handle. You can go for that. I even didn't go for that. I was waiting for more clean price action. Okay, so I was in 1 minute chart because I love to stay in 1 minute chart. Though I have the fair value gap from 5 minute chart, but I saw the rejection from here. It came back again to the top, but I wasn't actually. I didn't want to take that entry. Then I saw this very nice market structure shift from here. It has been shifted from there, or if you mark that one or anything. Okay, but it has taken the sales and liquidity. That is also not clean. This price action was so sloppy. Okay, so I even didn't take that entry. After that, I came into the macro, the 1150, I mean 1050 to 1110 macro. So that is the macro time. I immediately was thinking about the narrative, the Monday's narrative. What does it mean? That means when it will go above the Friday range, it will come back again inside the Friday range. That is the Monday narrative. Do I need to come it inside the macro, I mean the Friday range? No, you don't need it. Okay, but if you have the direction, you just can take a entry and you will be the profitable trader from that entry. That is enough for you. You see, this time macro has started at 1050, so here is 1050, and I would love to, sorry, okay, let me actually mark it from here. I'd love to mark the macro. So here is the macro, 1050 to 1110. When price came inside the macro, it went higher. Let me actually make it more bigger. It went higher and take the buy side liquidity. So I saw it has taken the buy side liquidity. After that, I didn't do anything over there. I was waiting for further price action. It went lower. Did I get in market structure shift? No, there was no market structure shift. Now you can tell me that brother, this low has traded that fair value gap and I got this displacement, so that could be my market structure shift. Yeah, you can say like that way, but this swing low I am not going to mark that on as my market structure shift, as only it has traded that fair value gap. That doesn't make this low as a swing low. Okay, for being a swing low there should be some more requirement. If you have any confusion, you can watch the video from the study section to my YouTube video. I have already uploaded how I mark the swing high or swing low. I hope that will be clear for you. So I was waiting and I saw this thing. Okay, price came lower, it went higher, and now this low is perfect for my shifting market structure. I marked this one as my market structure shift. This was my market structure shift, and that was a very nice displacement. There was my fair value gap. Okay, so I was going to take my entry over there, but actually I took my entry over here somewhere. Okay, let me actually show it to you from the execution. So I actually took my entry here. So here, when price was actually going up, I was thinking to put the limit order, and suddenly I just pressed the button. I took my maximum contract size, because top step will allow you to take 5 contracts. So I took 5 contract over here. You can see sell 5 contract, and this trade of it, I mean the live account. And then I took a partial below this low. I took a partial below this low. I took off 3 contract over there, and then I closed my trade below that low. I just closed it below that low. So that was the entry for me. I was expecting the narrative will work. So I took my entry over there. And you can ask me why, brother, why I took the partial over there and why I have targeted there. Because I don't see a swing low as my market. I mean the a liquidity. Okay, so you can see there was the relatively equal lows. This low and that low, that are were very clean lows, and I could mark them as my liquidity, as my expectation or my price action was telling me market is actually going to take the buy side liquidity over here. So I didn't want to hold it until here. So I actually marked the consequent encroachment. I was thinking price will come at least to the consequent encroachment or the upper level of this hourly fair value gap. That's why I took a partial over there, and when it came through the upper level, I just closed my trade, or you can say the way. And to be honest, brother, that is huge. I mean the profit was near about 30 handle, so that is enough for me for my live money. It was 2020, I mean $2,260, and it's enough for me. Okay, so it's up to you. If you would love to hold it until the liquidity, you can do it. Okay, so price actually later came here and it has taken the sell side liquidity, the relatively equal loss over there. Now when price came here, it started to go higher. Okay, now this is the lunch hour. At lunch hour, I do nothing. Okay, I have uploaded the entry video to this entry and also the entry I took over here. I have uploaded both of them to my Twitter. So if you were in my Twitter account, you have already watched the video. But if you are not over there, so I am going to explain this one. Now I didn't take this entry as I'm already being profitable from this and that entry. I don't take, I mean, 2-3 entries in one day. If I am profitable by one entry to my live account, I just don't do anything rest of the day. Yeah, I do paper trade or something else, or maybe I will put the position tool. Yeah, I do that type of things, but no trigger. Okay, I don't put, I don't push my button if I am already profitable. So when price came here, I am just going to mark the PM session, and the PM session start at 1. Okay, so this is the PM session has started. After PM session, price went lower. Where did it go? It has just taken the sell side liquidity from here. If you see closely, it went below that low. Okay, so if I'm not sure you can see it or not, but it has taken the sell side liquidity over there, and then I got my market structure shift over there. So that is my market structure shift. Now I would love to mark something else from here because that is important. If I just go here, that swing high, okay, that is a swing high as well. I mean, above the swing high, there is the liquidity. So that setup actually happened above the buy side liquidity, old buy side liquidity. Okay, so I got my market, I mean, liquidities taken, market structure shift. There was two fair value gap. This is one fair value gap. That is one fair value gap, and there is another fair value gap just below that fair value gap. So that is my breakaway gap. Okay. Now I took another entry over here. I mean, I didn't take it, but I just put this position tool and I put my stop loss over there. I have, what did I target? I have targeted the place where market should go. So you can see, not that one actually. Sorry, I marked it wrong way. Just a second. Let me remove this one and put it the way I put it before. So that low and this low. Okay, so I have marked the 1.5 standard deviation as my target. I have put my stop loss, sorry, I have just put my stop loss below the water block level. So this is the water block. I put my stop loss below the water block. Now you can tell me, brother, you told us that market can go below the consequent encroachment of the breakaway gap. Now this is kind of experience I have seen when price is just above the buy side, old buy side liquidity and very obvious liquidity. If the setup happened in that specific level, most of the time it actually trade the water block. Okay, so this is kind of experience I got it, and I can transfer it, as I have told you to my video as well, where I have uploaded this video. I told you I can't transfer that experience, but you will understand that experience. I mean, you will understand this by watching this setup again and again. This is very clean, and I really love this setup where I get clean liquidity taken and market structure shift after the two fair value gap, just one above another. I saw most of the time it worked perfectly, and it really don't go below the consequent encroachment of the breakaway gap. When only when it is just at the level of the old buy side liquidity or sell side liquidity level, then this time I have to be careful about the water block level. Okay, so I don't know it is gonna help you or not, but it is what it is. Okay, so actually price went lower, it came to the water block level, then it went higher, and finally it has taken that buy side liquidity. In the meantime, if you were with me in the Twitter, I told you that market actually came here, and I don't want to say price will trade that fair value gap, specifically that fair value gap. Why I told you like that way? Now this is also the same thing. It has taken the sell side liquidity over here. This is your market structure shift. After shifting market structure, this is your breakaway gap, and this is your first fair value gap. Okay, now this time if it has traded that fair value gap, that is kind of, I mean, sign that market really don't want to go above that level. Instead of that, it would love to go lower, and maybe it will take that sell side liquidity. That is also experience, because this setup happened here the same setup can't be happen just after the setup. So two setup can't be happen one after another. Now if it happened over here, the next setup that shouldn't be working. Okay, so that's why I have marked the upper level fair value gap, and I was expecting price will come to this fair value gap and then it will take the minus 1.5 standard deviation, and later price actually went more higher, and it actually take the buy side liquidity, it went lower, it is just over here, and this buy side liquidity is my target, but I really don't know it is going to take that one for today or not, but it is what it is. Okay, that is another price action. So this is the theme over here, and I would love to add the opening gap over here. So just let me add the opening gap. So here is the opening gap at 9:30. If you remember last Friday, I told you when I saw market went above the opening gap, I took my entry when it come back again to the opening gap. Okay, so price actually went through the opening gap, it closed above the opening gap. That is kind of sign that market is going higher. So if you would love to take this entry, if you don't want to take your entry at the top of the fair value gap, that's good, no problem. You can use the opening gap high to take your entry. If your entry cover your, if it helps you to manage your money management, then you can take that entry. Okay, still this entry is not valid for me because that is more than 17 handle. I really love to go for maximum 17 handle. Okay, so it's near about 24 handle, that's why I didn't take that entry as well. I was just waiting because I was pretty much confident that maybe I'm going to get some kind of clear price action and that will help me to be profitable. Now look at this entry, how beautiful the price action is happened over here. Okay, here that is little bit, I mean how to say, the little bit difficult, but it is also readable. Okay, so that was the video for today, and if you are already in my Twitter, you have already got this setup. I have all explained everything. One, that is not hindsight. Okay, so I have actually did this live, and that was my real entry over here. If you'd love to watch them from there, you can watch, it's up to you. Okay, so that's all for today. I hope that will help you to understand the price action little bit, and it is actually helping you to developing your trading journey. Best of luck, guys.